Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, May 24th, 2021. I'm going to go through the following charts in this order. We'll start out with a quick overview on the broad markets, the major stock indexes, and then roll into some individual trade ideas, either updates or new trade ideas, and I'm going to do those in roughly this order. Soybeans, sugar, copper, gold, silver, the U.S. dollar, and AMC, which just hit, or just last week hit our my minimum pullback target, and so far bouncing from there. Starting out with the broad markets, just a clean, simple view on the daily chart. We have all the major indexes still below those primary trend lines. This is SPY, the S&P 500 tracking ETF. Again, daily chart here. Most significant developments, we put in a divergent high right here, and broke down, back tested, and as I talk about often, back testing, you can continue to back test. Sometimes it's one and done, or sometimes you break down and never even look back. You never back test. Sometimes you break down, back test for a while. So we're a little bit below the trend line. Not even well, depends how you move it. See, with this charting platform, as I scroll, that candlestick kind of jumps around. So we'll just call it another back test of resistance. I'll get to the intraday charts in just a second, but I wanted to start out here with the bigger picture view. QQQ still well below the trend line there. Same thing. These are my clean boards. I don't have a lot of the lines marked up, but there was your divergent high breakdown right here. You can see, and still well below the trend line on the Qs. And then IWM, small cap ETF, and like with SPY and a lot of the others, you had a breakdown of the primary trend line right there, and then you hit some pretty big what I call BOD or benefit without support. With IWM, you had dual levels. You had that minor uptrend line right there. I mean, it comes back from the beginning of the year, so it's not so minor. It just it's subordinate to this primary trend line right here. And again, that's that purple trend line plus the 21,1175 level. So that's it. Kind of same story, man. If you look at big picture, we're going back. I'm measuring the distance and time right there, and that's almost 4 months of sideways trading in the small caps. We're exactly where we were about 4 months ago. Same thing with the S&P, except on a little bit smaller scale. We're back where we were month and a half ago, and then QQQ, no, well, I hit an extra Q there, but that's the right ticker. There we are back 4.1 months ago. So we've gone absolutely nowhere, especially in the leading sector, the technology sector now for 4 months. So nothing's changed there for me longer term. Near term, the charts, I'm not crazy about the recent action. So like believe I said last week, may want to hold off adding. This isn't ideal. Here's a 60-minute chart. I mean, we look at it this way on QQQ, 60-minute chart. We peaked here and we have been moving lower, and we are in a downtrend. There's your highs right there, 1, 2, 3. There's your lows. We need to take out this low to and stay below this high to just keep a nice clean downtrend. Again, downtrend being defined as a series of lower highs and lower lows. Now, sometimes you don't get a perfect downtrend. Sometimes you'll run up, take out the previous high, fall shy of the initial high. There's a lot that can happen. So I just want to say it's not black and white when you take out a reaction high, but it doesn't help the bearish case at all. Here was a reaction high there that got taken out recently right here and back tested. So again, better fish to fry on individual stocks, and that's been, you've been seeing from me a lot more trade ideas on individual commodities, individual stocks, and even some sector ETFs. Speaking of that, well, I'll loop back after I finish the 60-minute chart. So, from this point of view, the recent action over the last week or so has been bullish. We put in that divergent low, remember, on the 60-minute chart. That's not what I wanted to do. Positive divergence there, and it made a double low with divergence on the 60-minute chart. If you recall last week, I had taken away this trend line right here. I had it there before, and because we didn't get a reaction right there, we went through it, I took it away, but guess what? I added it back. Why? Because we now have another reaction on it. We went through it, but came in, made a perfect back test of it right there, and that also coincided with, remember, bounce target zone is a resistance zone, and resistance once broken becomes support, and that's what the Qs did so far. Made a back test of that and rallied off there, which is, from this perspective, nothing but near-term bullish, and we don't have divergence on the 60-minute time frame of the Qs, but we do on the futures. I'm going to get to that in just a second, and then we'll move on to the other stuff. But that's what the 60-minute chart looks like on QQQ. Again, since I'm not liking the action, just I'm sitting tight on swing short positions, but I'm not adding or to any active trading shorts, that I'm gaming. I see no reason. There's no resistance, so I can't make an objective case to add right now. And the fact this was the new most recent bounce target zone right here. We took that out. Then we had this previous bounce target zone, again a resistance zone defined by this gap. We had failed in there several times, including last week, but we just popped it today. And so what that means is the top of that zone was resistance. It was taken out. And again, really not much of divergence, maybe a little bit there on the RSI of SPY and QQQ. But let me show you the futures, and then we'll move on, because again, that's where I want to get to some of these other more actionable trade ideas. This is just more so an update on the markets. Okay, when we look at the futures, this is NQ, the NASDAQ 100 futures, 60-minute time frame. Wash, rinse, repeat. Look for these divergent lows and go long. Divergent highs, usually get a pullback. Divergent low, bullish. Divergent high, bearish, and that's put in this correction. Most recently, as previously highlighted, we put in divergence on the 60-minute chart right here. That was a divergent low. It was a bullish falling wedge pattern. We broke out, back tested, and so far been moving up with a series of higher lows and higher highs. So that is a near-term downtrend. I'm sorry, since here a near-term uptrend. Here's your peaks right there, so your higher highs in NQ. However, we've come full circle, so I'm going to hold off adding the words DH to this divergent high right here, because it's an unconfirmed divergent high. What I'm looking at is I take this line right here. Here's your divergence line, prices making higher highs. The RSI at this point in time making lower highs. Even if we come up and make an equal high with prices at higher highs, that's still divergence, as long as we don't take out that previous high. And then sometimes you'll have divergence on one but not both indicators. Right here, for example, we had that was about equal. Let's just move off that one, go back here. The PPO and the RSI, these are momentum indicators, and I often talk about this, and currently the momentum is to the upside. It's bullish. And so this is what I call unconfirmed divergence. You see I have a line here, a divergence line drawn, but that line can and will be moved and set. Right now, the PPO is pointed straight up, and that's because the market's going up, right? We need to reverse and then put in a lower low, a lower peak on the RSI there. So that's what I'm watching for, and I think we'll probably get it. There's a good chance we'll get it. Why? Remember, these levels in yellow, not this one anymore. It's been traded through too many times now, so that loses validity. That whatever that number is, 13,285, 286. It was working really nice as support before. That's why I had a line there. But this one's very, very big level right here. 13,702. In fact, if you recall, that's when we got the sell signal. That's what the break I was waiting for to go short the Qs, and we got it, and it was impulsive. And again, it's a pretty big level because it was important support back here, and we're coming up to that now. So where am I going with this? Well, if we get it, and we're close enough to it now, but a little more upside would give us a run into resistance. We could see the sellers step in, so it's something to watch for. And if so, that's going to give us the confirmed divergence. If we have a PPO crosses back down, we'll have a lower high and negative divergence right there. So that's what we're looking for. And you can see that trend line. I actually never removed it on my NQ. There was the down trend line right there as well, comparable to that 60-minute chart. See, we went through it here, but look, a perfect back test as well. So right now, this is nothing but bullish action. If we reverse here, then bearish. You can make and you can make a case to short the NQs right there on a push up to 13,700. But again, we have a lot of upside momentum, and when I look at the S&P 500 right now, ES, You see the same thing. You see it's kind of whippy trading, but I missed one here. I need to add, we had a divergent low right here. Let me add that because it's marked on the chart, but I don't have it labeled. This low right here was a divergent low. You can see the positive divergence right there. There's strong divergence on the indicators at that low. Divergent high here. So this is what the market's been doing. Get these divergent highs, divergent lows, rally, and that's still the uptrend since this divergent low. We're still on that right now. But we do have potential divergence right there. I labeled it here, maybe a little, well, actually, yeah, no, take it back. I labeled it for a reason. We had it right there. PPO made a lower high, and right now we've just exceeded that, but it's only extended this divergence. So there it is, guys. So it's a lot of talk about the markets, where we're at, but this is the big picture. You know, kind of choppy sideways action, and you know my thoughts. I'm sticking right now as far as swing positions, holding off on those because the daily charts still have sell signals. Intermediate term charts, the intraday charts, like these 60-minute charts, are just sloppy, and we're just going back and forth, going nowhere. With all that out of the way, let's jump into the trade ideas real quick. Okay, I already gave you a couple today. Let me give you one more, or a couple more. ZS. Where's my ZS chart? Here it is. I've talked about in the last week or so, even going back for the last few weeks, I started to cool back on the commodities trades. Said a lot were very frothy, some divergences in some of these, and trendline breaks. And so we did. We've had a correction. And remember, we're in a bull trend, an unmistakable bull trend in commodities, just about all commodities. In fact, all commodities. I don't know a single commodity that over the last year or so is not in a bullish trend. Whether it's industrial metals, precious metals, agricultural commodities, crude oil, you name it, they're in bullish trends. So with that being said, you have, along the way you're going to have pullbacks, and those pullbacks have been getting bought up. And I did make mention recently that DJP, that all-inclusive commodity ETF, here, let me show it to you, that it was showing you at the top of the channel, and we had this recent trend line break right here. And so that put that broad-based commodity ETF on a sell signal, and still, think we may walk down to the bottom of the zone ultimately, but we may, right here, for example, it wasn't a straight ride down. There's usually some bounces along the way, but last week I did mention, this is just a broad-based kind of overall commodity ETF. Each individual commodity has its own unique technicals. And so at any point in time, even if we get a correction down to here, you can have a couple dozen or more commodities correcting, and then maybe a handful, a dozen, half dozen, that are rallying at the same point in time, because corn has absolutely nothing to do with aluminum. Those are in this So let me give you some individual ones. And again, with the primary, thesis here that we are in a bull trend, I'll be looking to buy pullbacks to support on a lot of these. And so one of the ones that I wanted to highlight for you here is soybeans, ZS. These are soybean futures, 60-minute chart, nice, clean, bullish falling wedge. And a nice support zone just below. See, the support zone comes in at about 1494 to about 1500, and we're almost there. So we could easily work our way down, and if we do, again, this is our support zone right here. Support zone. You can see these previous reaction lows. If that's broken, I don't have support all the way until about 1450, but with that being said, again, we're in a bull trend. So any pullback to that level, to about the 1500 level, is an objective long entry with a stop below the zone, or I should say, a breakout above the downtrend line or the bullish falling wedge. Why did I say and/or? It means you can take a partial position there if you get the pullback, and then add on a breakout of the trend line, or we may break out of the trend line before we even get there. That's one thing about a strong bull trend is when all eyes see a level, and it's very obvious to most of the traders. Sometimes the buyers step in a bit early because they don't want to miss the reversal, and then you can actually do that. So there's your targets: 1553 and then 1575 would be your two near-term targets. And should commodities continue the next leg up, if you're a longer-term trader and you've been looking to position into soybeans, you could just trail your stops up and let it ride. Maybe we go to new highs. Hard to say, but we do have bullish divergence and bullish falling wedge pattern there. So that's one ZS. If you do not trade futures, and I understand that, that's why I will usually try to cover these ETNs for you. SOYB, soybeans. Now, a little bit of cross current here in the technicals. We have on this daily chart, we recently put in a big divergent high. This is negative divergence. First time in quite a while. It's been a nice run. I was bullish on soybeans back here, highlighted this divergent low, the breakout, and this thing never looked back. From that divergent low, soybeans, via this ETN, the futures probably actually outperform this because you have fees and things that the ETNs have to contend with. But it's been about an 85% run in soybeans, and that's just over the last year, since last May or so, when we put in that divergent low. But again, that's pretty healthy run, and there's some negative divergence, and here's a primary uptrend line. So the thing about it, and I always say this, if you decide to take that soybeans, the setup on the 60-minute chart, and you go long, don't get married to it, because if you break this support zone that I just showed you, well, you're also going to break this primary uptrend line on the daily chart, and being that it's coming off this divergent high, it could lead to a much deeper correction. Now, it's going to take a whole lot to undo this bullish trend. So even if we get a breakdown there, at this point in time, the charts are constructive, and I remain longer term bullish. I just wanted to point that out. Very important to note. That's why I like to use multiple time frames when trading. And when I jump down to the 60-minute chart, again, that's what we're looking at on the futures. There is a primary uptrend line which was recently broken, gave us a sell signal. We had the divergent high right here. See, so it wasn't just a random correction. This was a drop of so far a 7% correction in soybeans, and it came, after you had a divergent high right there. And however, we've come full circle. Again, this is a bullish falling wedge pattern right there. And I already showed you we were at or coming up on support on the 60-minute chart. So if you trade SOYB, this is where you'd go long and break out a bullish falling wedge, or pull back to that support I just showed you on the futures. And targets, you're really better off using the futures charts to align your price targets, even if trading this ETN. But it's because you have more levels, it's easier to identify those. But if you just want to trade off this 2340 and then 2382, those would be your two initial targets right there for soybeans. SOYB. All right, let's move on. Next one up, sugar. Sugar is also looking set up for potential bounce here. Let me grab that chart for you, and that is SB for sugar futures, and then I'll go over the ETN. Just make sure this one's up to date. Okay, what I see on sugar, also pulling back to a really nice support zone. Why is that nice? Look at all these reactions on this level here. I'm going to circle all these reactions from below, then we broke above it, reactions from above, and that's a really nice support zone, and it runs from about 1655 to 1663. That's 0.1663, 0.1655. So that's it. You buy sugar at support, and there's a potential trend line right there as well. If that gets broken, I'm going to give you, there's a little bit of resistance right here it'll have to contend with, right about where we are, but I think that we can swing back up here to about that 1735 level. That's a really nice resistance level where we'd probably have a reaction. Same story, if you're a longer term investor and you sidestep the correction in sugar, or you already had a position you want to add to it, or you just want to take a new position, you can go long with a stop somewhat below that support level. Give it a little bit of room in case they try to run the stops, and then let it run. Maybe sugar heads on up to the next high. This is remember, in a bull trend, just like the stock market's been for many months. It's usually these 60-minute divergent lows that are the catalyst for a run up to new highs. So there's a setup for you. SB sugar futures, or you can trade the ETNs. SGG is one of them. A little bit thinly traded. You see those wonky looking candles. That's because it's a thinly traded ETN. And here's one just from another company. Same thing, track sugar futures, cane, and you can see, I don't know, some of these aren't missing the levels. There was a nice, clean, bearish rising wedge with negative divergence here on this 60-minute chart. And so that was the, foretold, or was a, warning a likely correction was coming. And then when you broke the trend line, you certainly had the correction from that divergent high. Sugar corrected about 6.5% and has set up in now a bullish falling wedge confirmed with positive divergence. Okay, so that lays out the case for a trade in sugar. And HG, I think this is the one. Yes, this is the one I shared with you this morning, and it's continuing to rally. I like this one. It was just breaking out when I posted it this morning. Really nice support there around that 44.83 support. See that support level? And nice clean bullish falling wedge pattern there and breakout. And I already gave you the targets. Minimum target is at 462.67. That's the actual resistance level, so you might want to sell just a little below if that's your target. And I'd put a decent odds that you probably get a reaction there, but continue on up through and maybe hit this downtrend line. We'll see if we get a reaction. It's only a potential trend line because I have just 2 reactions so far. But that's a potential target. Maybe overshoot that 46, about 463-ish level maybe, and then come back down on it. Either way, looking good near term on the 60-minute chart. And if nothing else, objective with a stop somewhat below. If we take out all these recent support levels that I've just showed you on a lot of these commodities, then we may get a deeper correction, and that DJP may come back down to the bottom of the channel sooner than I expect. But at this point in time, I think the dip buyers probably step in here. A lot of people want on board this commodities trade. At first, I think a lot were dismissing that as just bear market rallies, and I think at this point in time, I am no longer the only one out there, or one of the few beating the inflation drums and the bullish case for commodities. So just like you've seen in the cryptos, you get these big drops, and then there's the people that have been wanting to get into cryptos forever, and they buy, and that's why you have those volatile moves. The dip buyers step in, and again, so take it, don't take it, but it's pretty objective, like I said, with a stop. Obviously, if you can get it closer to the bottom, great, but we've already broken out, and that's the thing. We already hit support, so at this point in time, we're still above the wedge. Yeah, but not too far from it, so still offering an objective long entry. And then CPER, and I already shared this with the chart this morning. We've since broke out. There's your 60-minute falling wedge. You had the same thing. You had divergence at the high recently, and a little correction there. Looks like an ABC down, and then bullish falling wedge breakout. So there's your comparable targets. And again, I posted a static chart of this morning. Updates on gold. Let me do that real quick since I said I would. GC. GC is still, in a very nice uptrend. As I mentioned, I'm starting to be able to make a decent case for a counter trend bounce in the dollar, and if so, that might put pressure on gold. I think I mentioned last week, I'm not as keen on shorting a lot of these commodities, including gold and all that. The trend is so strong. It's more of just a micromanaging or managing your positions, not the most objective time to be buying gold, in my opinion. If we get the correction, pull back. I've given you multiple support option levels, 1845, 1833, the uptrend line. If those get taken out, about 1800. And again, nothing's changed since last week. We still have the negative divergence on gold and positive divergence on the dollar, which I'll get to in a second. Silver, we hit that trend line. I gave this to you last week and showed you an uptrend line here, which was hit, and we bounced so far, but we are coming off a divergent high right there in silver, and so far that's a leg down. If we break that trend line, we're probably going to go lower. Where to? I'll watch gold and the dollar as well, but that's certainly a support right there, about 26.73 or so. And then if it gets a little uglier than that, and there's more downside, I'd say the next decent support comes in right around here, about 25.77. Excuse me, and that's silver. And then on a related note, the U.S. dollar futures, DX. This is what it looks like here. Really no change since last week. I showed you a support zone all the way down here. Really the big level is right here, about 89,659, because we've had multiple reactions there recently, including these last two. And this is the downtrend line. So when we break out above the downtrend line, as I said, we could get a move up. There's a reaction high, probably go like this, and then rally up to there, and that could put some near-term pressure on gold and silver and the other dollar-sensitive assets and commodities. But you still have the divergent low in place. And even if if the dollar breaks down like it did here, a little whipsaw down through there, anytime soon, it's still going to have positive divergence. These indicators could have another thrust down and still keep that positive divergence intact. So although we don't have a buy signal, we have an objective long entry. If that's confusing, buy signal comes on a breakout above support or bullish chart pattern, and that is an objective long entry, on that breakout. But although this is not a buy signal, it's an objective long entry because it's a pullback to support with still any little marginal thrust down below, as long as it doesn't wipe out these divergences, still offering an objective long entry. Okay, and last but not least, just another great example. I mean, this is where the easy money is. It's a lot easier to make money on trading individual securities, stocks, commodities, than trying to trade the broad market. Because remember, when you trade the broad market, I'll loop to that after I cover AMC. When you trade the S&P 500, for example, you're buying or selling, if you're short, the most bullish and the most bearish stocks in the index, and there's 500 different companies in there. There's 11 different sectors. At any point in time, some are going up, some are going down, and so that's why you're gonna, especially when the broad market, as I showed you recently in the beginning of the video, is going sideways. You're going to get it's very tough to make money, whether you're a bull or a bear, if the S&P 500 is just slogging around sideways for a couple months. But on these individual stocks, it was last Tuesday, I believe, right here, I pointed out we had 1, 2, 3, 4 failures at that 1432 level, and we were trading right there, and I pointed this out as an objective short entry with a swing down to about the $12 area right there, and we hit 12. We hit 1203 actually right there. I always say cover above support, and so your target would have been 12, a little above the $12 level, and that was 1203, and so that was good for a 17% quick 17% short trade. In fact, 2 days we hit that 1203. That was on Thursday, and then you had another chance to cover again on Friday. And then if you're an active trader, that's why you can game these levels. And so look, the buyer stepped in where they should have. It was good support, and now this thing is up 13% today. At where you go from here, I don't know. That's still resistance at 1432, but that was a kind of a hit and run. I think it'll have another leg down. If we get back up to 1432, and I don't think we will. I think the sellers will step in a little early, and we may have even seen that at today's highs. And if so, I think we get another thrust down in this one. This is one of those, as I mentioned last week, loved by the Reddit traders, and they think it's going to the moon, like whatever. They think they're looking for a redo of GameStop, but I think this one will come on down here ultimately to this 9 to 942-ish support zone right there, and that's AMC. All right, before I wrap the video up, something I forgot to do in the beginning of the video. I covered the indexes pretty much in detail, but remember I've already covered tech quite a bit. Tech already had a pretty decent correction, and the three sectors I'm looking to see break down are XLV, healthcare, This is the second largest sector in the S&P 500, still above trend. XLF, the financials, still above that trend line. And this is why the S&P refuses to break down, because these sectors are hanging in there. Just want to say, still above trend. And then XLI, still above trend. So until these sectors give way and break these trend lines, we will not have what I call an all-in short, or a high probability sell signal in the market. We're still below the trend lines on the major indexes, and that's because tech and some other sectors are broken down. But you need to see these guys break down, because collectively those three make up more than XLK. XLK is the tech sector. It's about 25% of the S&P 500. But when you add up the next three sectors, they comprise collectively a higher weighting. So it only makes sense, that you're not going to see the broad market break down until these guys do. So those are things to watch right there. All right, that's it. Some trade ideas, an update on the market, and anything else that I see today, I'll be sure to get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.